Ashwini, you don't like metal stocks, and we've discussed this in the past, but at a time when you are staring at this entire dollar interplay, which is weakness in rupee will translate for better earnings for exporters, metal companies will also gain, because a lot of metals which are sold in India, they are sold on import parity. And just for the benefit of our viewers, Ashwini, the point we are making here is that if global metal prices, the way global metal prices are sold is that the pricing is always calculated as per the international pricing, which will always go higher because there is weakness in rupee.
No, you're right. You're absolutely right that commodities are dollar commodities, and to the extent that the rupee is a weaker commodity, earnings in rupees for all commodity companies will look better as we go ahead. The reason why I have personally never been comfortable with metal stocks, and I've said this in the past, is because of the inherent volatile nature of the end commodity. On top of that, in the recent environment when we are seeing this entire war of words between China and the US and tariffs going up and going down, India is sort of from a policy measure not retaliated but tried to insulate the domestic industry by providing some duty protection, which happened in the case of steel, for example, 1.5 years ago. So, you also have to contend with uncertainty of policy where suddenly, one fine morning, under some pressure or the other, the government may decide to move on tariffs in one direction or the other. International commodity prices are extremely hard to predict. Taking all of this into account, my sense is that I would personally rather stay away. But that's a call that we take as investors for our portfolio. And other investors may well take a very different view and may do quite well taking that view as well, because as you point out, it is absolutely right that a weaker dollar helps the rupee earnings for commodity companies, but there is a volatile nature and unpredictability that is associated with metal companies, which investors would do well to consider at the time of making this investment as well.
Closing question, and I promise this will be the last one. This is not on Yes Bank, I promise you this one. In general, what to your mind is the mood point from global investors? We may feel very excited about our country because earnings recovery are strong, we are in a much better positioning from Brazil, Turkey and Russia. But if you've invested in India, in dollar terms your returns have not been there. So what is the general view, that we like India but India is expensive and there are no returns, or the faith is still on and everybody is not focusing on the path behind, but everybody is confident that the darkest dusk is over and now there is going to be light at the end of the tunnel?
So I can't speak for the foreign investment community at large, but I can share our perspective. You're right that the earnings growth in the last 3 years has been quite pedestrian, and stock market returns have not been that great in dollar terms. But I think at least the way we think about India is that you are hopefully at the cusp of a very strong earnings revival after several years of consolidation. I think what's happening in the banking sector on the cleanup of the NPLs is very, very encouraging. We haven't yet seen the second order and the third order effects of the NCLT process actually proceeding to a point where borrowers start to feel worried that they might lose control of their businesses if they don't pay the banks back. If you take a leaf out of what the credit scoring of individual investors did to credit quality with retail borrowers, I think something similar should happen on the industrial lending side over the next 5 to 7 years. You have a situation where private capex has been very, very low for the last 4 or 5 years, and I think we are sensing that things are starting to improve. If you think out 2 or 3 years, yes, we always have the political uncertainty in the country to contend with in the interim. But if you look at 2 or 3 years out, you might be looking at a very strong set of corporate performance and earnings. And while in aggregate valuations are expensive, as I pointed out, there are several pockets where valuations are extremely attractive, and where the core story is pretty decent, where balance sheet is in a good shape, where management is credible, and I think these stocks can give you a very handsome return from here. So on a bottom-up basis, we are quite excited about India, and that's how we look at it.
Okay, Ashwini, great speaking with you. Thank you so much for taking the time out and speaking with us.